Ready? Dear Damen, dear Herren, herzlich willkommen op der 37. Edition von Midi de la Microfinance. Ladies and gentlemen, welcome to this 37th edition of the Midi de la Microfinance et de l'inclusion financière organized with the support of Directorate for Development Cooperation and Humanitarian Affairs, Infine Network, and in collaboration with the Bank de Luxembourg and BRS, Belgium. Today, we are touching another interesting question, which is to review how microfinance can reach more beneficiaries thanks to the development of the Islamic microfinance products. After having worked years in Muslim countries, among which we have Afghanistan, Pakistan, Mali, and other West African countries, I am delighted to bring this subject to your attention. The global Muslim population counts for about 1.6 billion people, but over 70% of them do not use financial services. Islamic microfinance account for less than 0.5% of the global microfinance market, accordingly to the 2008 CGAP survey. Islamic financing is unique and essentially different from conventional microfinance. The sector seeks to provide an economic empowerment tool for poor or disadvantaged people based on Islamic financing methods that avoid interest, which can seem impossible for us traditional bankers and microbankers. Islamic finance has an approach that gives a value to profit, but not only for loss as well, sharing. The specialists invited to this Midi are Dr. Mohamed Crossing and Mrs. Fadwa Boudiba. Mrs. Boudiba is a senior investment officer for the Middle East and Africa with Triodos, one of the largest leading sustainable banks, headquartered in the Netherlands. She worked extensively for many years with Incofin, Belgium Investment Fund, as well for World Bank based in Cairo in technical assistance, and as well years of experience in formal banking. Dr. Mohamed Crossing is head of the Global Islamic Microfinance Business Unit at Islamic Relief Worldwide, an independent humanitarian and development organization with headquarters in Birmingham, UK. Dr. Crossing completed his PhD on the political economy of Islam. He is a development economist with over 15 years of experience of working with Islamic development and financial institutions. Our panelists will discuss about the development and the contribution of the Islamic microfinance to the financial inclusion. They will explain the main principles of the Islamic microfinance as well as challenges it copes with today and opportunities for its expansion. They will as well explain how the sector adapts the social performance standard and women empowerment and rural development. David Demullier, Mr. David Demullier, who is currently Senior Project Manager for a French financial public institution, will moderate the discussion. He worked for 3 years up to recently for the European Investment Bank in charge of Middle East and North Africa region. Together with you, I'm looking forward to a fascinating discussion. After the presentation, there will be a question and answer session followed by some closing remarks. I am now very happy to give the floor to Fadwa, Mohamed, and David. Enjoy the discussion. Thank you.
Thank you.
Thank you very much, Olivier. Before starting the debate, we would like to show a short video released by CGAP in close cooperation with Wasil Foundation based in Pakistan. This will give us a quick introduction to Salam. Salam is one of the Islamic product used by Islamic microfinance institutions. After this video, we will also have the opportunity to describe another Islamic instrument, Murabara, after and during the debate. We can launch the video, please.
Pakistan is an agriculture country. The poverty level is very, very high. To alleviate poverty from the country, we have to focus on the micro farmers. Some of the farmers are very religious. They will not opt for interest-based lending.
So in 2009, Wasil Foundation began offering farmers in Punjab Sharia-compliant financing.
We
are in Morkunda. This is a very rich agricultural area. The client we are going to right now, his name is Khizr Hayat. He was the first ever client who ever got Salam. Salam is basically an advanced purchase in which we determine the price, the quantity and the quality at the very start of the contract. Islam encourages trading. We're engaging in trade rather than lending, rather than charitableness.
These farmers were not able to reach to the banks. They were going to middlemen. The middlemen used to provide them all inputs on credit.
Khizr Hayat used the cash to buy fertilizer and seed in June when prices were low.
He's saying that the harvest this year is very good and he's quite content with that.
His wife and kids helped dry the wheat. The agreed portion goes to Wasil, and any surplus will be sold on the open market.
We store it in a warehouse and then sell it to flour mill. We have better negotiation powers to sell it in the better rate.
He was an early adopter. He saw the good that this can bring. Actually helped him to plant more crop and get more yield.
The increase in his wheat yield means that he's been able to rent more land. He also bought 2 buffalo, a plough and this new tractor and thresher.
ਕਾਰੋਬਾਰ ਚੱਲ ਗਿਆ ਉਹਦੇ ਵਿੱਚ ਸਾਡੀ ਤਾਂ ਜ਼ਿੰਦਗੀ ਵਿੱਚ ਇਜ਼ਾਫਾ ਹੀ ਹੋਇਆ.
And all that has had a big impact at home.
Before, he had a small house over there, and then after taking financing, he built this house.
Unlike Khizr and his wife, 2 of their sons and 3 daughters have been able to stay in school.
Over these 5 years, we have seen a rapid exponential increase out of poverty of this one client of ours. We're going to Sharakpur right now. This is a guava-rich area. We have disbursed an HR financing. We take a piece of land on rent, and then we sub-rent it to our farmers. And the farmers can either pay in cash or they can pay in the form of crop.
Muhammad Rizwan got himself into debt and ended up working 2 years as a day labourer to pay it off.
Alhamdulillah पाक दा बड़ा शुक्र है कि हुण मेरे कोल कोई 2-4-10 मजदूर ने.
He had the experience of picking, but he did not have any capital in order to get an output of his own. So we got him 7 acres of land. He planted guava in his field. He picks the fruit. He sells them to the open market in Lahore, in Karachi, Islamabad, all the major cities of Pakistan. Within a period of 1 year, he made a profit of 650,000 rupees, which is an exponential profit.
आज मैं ठेके लिए खुदा मेरी मदद करे हो सकता मैं आने वाले वक्त में मुल्क खरीद ला.
Muhammad is now on his 3rd cycle of financing. He's used a portion of the income he's made to make improvements to his parents' family home.
ਉਹਦੇ ਤੋਂ ਫਿਰ ਪ੍ਰੋਫਿਟ ਤੋਂ ਪ੍ਰੋਫਿਟ ਜਿਸ ਲਈ ਮੈਨੂੰ ਫਿਰ ਬਾਗ ਜੀ ਮੈਂ ਫ੍ਰਿਜ ਲਿਆ ਫਿਰ ਇੱਕ ਟੈਲੀਵਿਜ਼ਨ ਲਿਆ
That's his mother. Out of the yield of the next crop, he plans to build 2 more rooms on top of this for the other 2 brothers who are getting married.
And now Mohammed is planning his own marriage.
The lives of these people have not changed over hundreds of years. But alhamdulillah, we have seen radical changes within 1.5 years.
There is a rapid jump. Their income is almost doubled.
Wasil's latest offering is Master Salam, a contract that combines Ijara and Salam so that farmers can rent land and have cash in hand to buy fertilizer and seed. With this innovation, they hope to go much further in meeting the needs of smallholder farmers.
We need to scale up. We have 50,000 clients who are ready to take financing from us. But unfortunately, we don't have enough funds to finance all of those people.
I want this product to be in whole of Pakistan. It will be a role model not only for Pakistan but for other countries as well.
Mohamed, would it be possible for you to give us a quick overview of the instruments available for Islamic microfinance?
Thank you, David, and of course thank you for Ada and Banque de Luxembourg to organize this beautiful event here. Well, this was Islamic Microfinance, the movie. Obviously, in the movie you've seen lots of different Arabic terminology being used for financing instruments that are probably quite familiar to you. However, they're not used, of course, in the conventional, as we call it, microfinance industry, because these are not interest-based instruments. Islamic finance and the value proposition, if you like, of Islamic finance is that a fixed or a guaranteed return is not just, and therefore we need to find ways of exposing the investor and the entrepreneur to the risk in a fair manner, and therefore traditionally there have been a number of more charitable types of Islamic finance instruments, social Islamic finance instruments being used in the Muslim world for many hundreds of years, but more recently, and the video that you've seen really was actually made by CGAP for the Islamic Microfinance Challenge in 2013, which the Wasil Foundation won for this innovative way of working with very traditional instruments and farmers. Now, there are really sort of 3 broad categories in Islamic finance and Islamic microfinance. Islamic finance and Islamic microfinance are really using the same instruments. We're just applying them in microfinance within the financial inclusion context. Well, there is the one broad group which are trade-based instruments, where the MFI is actually selling an asset to the client, or in this case, buying an asset off the client and pre-financing that. Then there's lease-based instruments. Ijara, you heard here, which is really just a lease contract. Okay, can be used for lands, can be used for machinery, etc., etc. And then there are profit and loss sharing instruments, which are really, if you like, micro-equity types of arrangements. That's really, in a nutshell, what Islamic microfinance has to offer.
Thank you, Mohamed. Fadwa, could you please describe briefly the mechanism of Salam that we heard in this video?
Okay, thank you, David, for the question and for the invitation, and thank you, Ada. Actually, the Salam product is really different than what you can see in the Islamic microfinance, because as my colleague Mohammed mentioned, one of the products that is the most developed on the Islamic microfinance is the Murabaha. So this Salam product, it's really different because how does it really work? Is an advance payment, is an advance purchase agreement against a delivery of a crop. So it's totally different than the conventional microfinance. How does it work? The microfinance institution with finance is going to finance a micro-entrepreneurs, and the micro-entrepreneurs repay the microfinance institution against crops. Okay, technically, how does it work? How is the price defined of the crop. The price is predetermined way before the collection of the crop. So based on previous year of harvest of agriculture and the market rate. So with the money, the micro-entrepreneurs will buy fertilizers, seeds, and so on. Then at the time of the harvest season, the microfinance institution would collect the crop that was at the price that was agreed, the amount of crop, will store it in the warehouse and then sell it later on. The micro-entrepreneur will remain with a portion of the crop and actually will sell it in the market. So that's the way this salam is really different, because we use it mostly for agriculture, and it's a really different way from the conventional, where you have a different relation, you're a borrower and a lender, and in this case, you're a partnership. So this is what my colleague Mohammed was talking about, the profit and loss sharing. Because you were talking about agriculture, so you have a risk that the crop will not be delivered, that you have bad harvest season, and so on. So in order to prevent from one of these risks, you have the takaful, you have the insurance that will help and protect the microfinance institution and the micro entrepreneurs also. So this is really widely used in Pakistan. But Wasil Foundation was one of the innovators in this aspect. So this is for Salam.
Thank you, Fadwa. Mohamed, we have another product, this Murabaha. Could you please maybe explain briefly what is Murabaha and give us a nice example?
Yeah, Murabaha really is almost a reverse transaction of what you've just seen Fadwa describe as a salam. Murabaha is a cost plus sale, okay? It includes the on-the-spot delivery of an asset, and it allows for deferred payment. Murabaha is a sale where, however, the seller, in this case it's the MFI who's selling the asset, okay, who has to, however, declare their profit margin to the buyer. Okay, so it's very clear. You want this cow? Okay, I can sell it to you, and it'll cost me $100, and I will sell it to you for $110. Okay, and I will take it. I will go. We see the loan officer on his motorbike, and he will take the cow from the market, throw it over his shoulder, and drive it to the homestead of the farmer and deliver that cow. And then the farmer has the opportunity to pay over 12 monthly installments, for example, the markup price. Okay. Now you might say, well, actually, that's a little bit like, really like an interest-bearing loan. There's $100 and $110, so that's a 10% interest rate. Well, actually, we haven't yet sort of talked a lot about the principles of Islamic finance, but of course, it is a sale, and we have bankers in the audience, presumably, and we have also accountants in the audience. In Islamic finance, as compared, for example, to the International Financial Reporting Standards, where we talk about substance over form, Islamic finance has an understanding that form actually is more important than the substance. Okay, so here we're really talking about a legal agreement that the MFI enters with the entrepreneur or the financer with the farmer about a sales transaction, okay? And in this case, of course, the MFI has to actually go and purchase the asset, take the risk of purchasing it, and deliver it to the entrepreneur, the farmer. So there is the risk exposure is there, and of course we're creating a debt by allowing the farmer to repay that asset over a certain period. But it is the underlying transaction is a sale and not a debt-based loan. Okay, but that's the main difference really between an interest-bearing loan and the murabaha transaction, which is very common in Islamic microfinance, very common also in the Islamic banking sector. About 70% of all transactions that we see in the Islamic banking sector are murabaha based. Okay, you can do this with commodities and other types of assets. And it's a very popular instrument. It's also a relatively straightforward instrument because it as I said, it does look a little bit like an interest-based transaction, although, as we say, the form here actually is trumping the substance from an Islamic finance perspective.
Thank you, Mohamed. So now that we have described some products, I think we can move to the market of Islamic microfinance. Microfinance is growing very quickly throughout the world. How can Islamic microfinance contribute to these developments, Fadwa?
The Islamic microfinance?
Yes.
Okay. Well, if you compare to the conventional microfinance industry, the Islamic microfinance represent maybe less than 1%, maybe 2%. Is really hard to really define a figure, but it will be 1 to 2%. The potential is huge. We are talking about Islamic microfinance not only in Arab country, but the country where Islamic microfinance is really spread is Bangladesh, Sudan, Pakistan, and Indonesia. Those 4 countries themselves represent about 70 to 80% of the Islamic microfinance sector today. Having said that, you can see that if you are very familiar with the ex-Soviet Union country, Tajikistan, there is a new regulation on Islamic finance. A lot of countries start to show their interest, not only in Arab countries. Actually, if you look at the MENA region, you will see that in those countries, the Islamic microfinance is not well spread. Most of the conventional microfinance institutions will just have one product that really tackle Islamic microfinance or window. You can see that in Morocco, in Tunisia, there are new thoughts about the change. Africa, you will see some institutions start really to work in Islamic microfinance only. Pakistan, obviously. But what is important to understand is, in Islamic microfinance is, what do you want to do? How is the market? How is the sector? How sensitive is the population about religious thoughts? We are here today to discuss about this Islamic microfinance because, in my view, there is a potential. Those people are Muslim and they are poor. So we are coming up with the same typical microfinance conventional to them, with those type of product that doesn't fit their belief. So in my view, they are double excluded. They are Muslim and they are poor. So as a social investor, as an investor that really want to make a difference, I think we need to go through this niche that is really untapped. Today, I don't know how many, it's very difficult to assess, but I think we can say there is a few millions of clients in Islamic microfinance, but the potential is way higher. So it's important today to develop product to approach this category of client, because with the new refugee crisis, I think the microfinance sector overall is changing, and it's important to approach those people with really right product.
Thank you, Fadwa. Mohamed, would you like maybe to add something about financial inclusion, contribution to financial inclusion with Islamic microfinance?
Yeah, I mean, I like to, whilst I agree with her, I also like to disagree a little bit with her, because our own experience operationally is that we do work in Muslim majority countries. We also work in other regions of the world, and we also have actually non-Muslim clients actually coming to us and being interested in this different way of engaging with MFIs. Okay, because. That's because of the client experience, and as a microfinance industry, we're just sort of coming out on the other side of maybe a bit of a dark period. Okay, when we're looking at the early 2000s, really, where as an industry we had problems. Okay, maybe there's big discussions still about mission drift and otherwise. From the client experience, and we're talking a lot more about client-centered microfinance nowadays. Our own experience of talking with clients, and that's not on a religious basis, because we don't discriminate who we deal with on any of these kind of categories. Just from a sheer client perspective, we have people coming in Pakistan, for example, to us and saying, look, we want to do this because I don't like the idea of having a debt hanging over my head. I much rather like you to be an investor. Okay, it's easier specifically when the investor is also happy to share my losses. and much more difficult, of course, when the investor also wants a share in your profits. But nevertheless, it's a business model and a proposition that actually is appealing to all communities. If you look at statistics in Malaysia, which is one of the more developed Islamic banking markets, it's actually the Chinese community who's taking up Islamic banking, not the Malay Muslim community, but the Chinese community, because the business proposition that Islamic banks offer, and also the rates, and that's not interest rates, but profit rates, okay, are actually more favorable, especially if you are interested in equity financing. So there are opportunities, obviously, and I do think it's about looking at the opportunities that we have with unbanked people in a lot in the Muslim world, so to speak. If you look at the World Bank Findex, you see the graphical illustrations, and you see that red band going across the globe. Yes, that's Sub-Saharan Africa, that is South Asia, that's Central Asia. You have in Sub-Saharan Africa, you have maybe adult bankability rates of 10-15%. Now, when I speak to bankers, I'm saying, look, that's your, it's not the 10-15% you're looking at. You have to look at the 85-90% that could be your potential customers. It's microfinance institutions like all of us would have to do maybe the hard work and get them onto the first rung of the ladder. But that's the way to look at at the opportunities, and therefore you do need to offer those clients a product that they demand, and I think the demand is very strong. Also, we heard Olivier earlier on talking about experiences in other Muslim countries. The demand for these sort of products is definitely there, and it's just really about pulling into the same direction in terms of financial inclusion and enabling the whole industry to kind of use the whole width of models that can be used to bring people into the formal finance sector.
Fadwa, maybe you want to, yes.
Actually, I agree with you. We are totally on the same page. Some microfinance institutions, for instance, in Palestine, were launching the Murabha product, and most of the clients were Christian, because they really, as you clearly said, they prefer the idea of having an asset. And some microfinance institutions that I have seen in Africa, they will rather do this type of product to mitigate the risk of using the loan for other purposes than the really business relationship, purpose that they promised to. So yeah, we were on the same page. Yeah.
Okay, so the products are open for other population, but what are the main principles that Islamic microfinance has to follow from Islamic finance? Mohamed?
The main principles, and of course, Islamic microfinance is really, of course, if you like, a subsector of the Islamic finance industry, using the same types of ethical guidelines, if you like, and of course, by and large, also the main products. Well, the key principle really is that there is no such thing as a guaranteed return. And that's to a large extent to do with the idea or the concept of money in Islamic economics, which is really just a store of value. Okay? So you cannot charge rent, if you like, on the use of money. Okay? Any kind of revenue or profit that can be generated has to be generated through productive economic activity, okay? And that also then includes if you like, risk exposure to both parties. So the idea of a guaranteed return through an interest-bearing instrument or loan is a big no-no in, if you like, Islamic finance and also microfinance. The other big principle is also, of course, that we have to stay away from any excessive, if you like, risk or speculation. Okay, so there shouldn't be any speculative types of investments or forward sales or short selling and the like are also not allowed in Islam. And of course, the idea, as I already mentioned, that we have to really be engaged in real value creation, and that's because Islamic economics sees the role and the function of the economy to serve society, and that's the society and the societal good as a whole, and not just a small number of people. And we are in a bank today, and we believe this is a good bank, of course, that also, of course, works with the community at large, and that's really, of course, the idea of banking. And and I think a lot of us now, since the global financial crisis, I think we are rethinking slightly, the business models that we've used. And this is really, in a sense, where the Islamic or Sharia-compliant microfinancing can come in. And it's really a business model that, is really something that's open for debate in many ways, and it doesn't also require you to be a Muslim to use it. So that's the other side of things, if you like. It's an ethical value proposition that doesn't actually require, a particular religious, adherence.
Yes, Fadwa, as an investor, what do you think about the profit and loss sharing principle?
I think Islam deems profits, they forbid interest, but you can be sustainable, you can be profitable. Nothing in Islam prevents you for generating income and profit, as long as you do it in a sustainable way, in an ethical way, in a fair value. And then you are both partner. Is an equity, is a marriage between the microfinance institution, micro-entrepreneur, for the success of the project. It's a totally different relationship, as my colleague mentioned. And that's the way it is for the microfinance sector. So that's why we have so many different type of projects. But once again here, interest is forbidden, but not profit. Good microfinance institution in the conventional sector, we can learn from them. We can build up the skills of the Islamic microfinance, a good governance, good product, good risk management, good report, good product are the same principle that you can apply in an Islamic microfinance. So it has nothing to do that. It's not for free. You have some charity, of course, some tools specific for charity, but an Islamic microfinance institution can be sustainable and can generate growth.
Yes, Fadwa, you were talking about the business model of a microfinance institution. Mm-hmm. What is the importance of making profit for an Islamic microfinance institution or organization? Maybe Mohamed first.
Of course, I think we need to first of all admit that the Islamic microfinance industry is still very young, okay? And that's very, a journey that those ones who are slightly, more experienced, say, in this sector, will remember, of course, from the 1980s when Muhammad Yunus first started promoting the idea of social collateral. A lot of people were very, very skeptical about lending, a poor person $30, high risk, very unlikely to, ever be returned. But he actually persevered, and he created the Grameen Revolution, if you like, that has made a massive change to millions of people's lives. Islamic microfinance really has only, though we are building on a long and rich tradition of social finance within Islamic communities, but as an industry it's really only 15 years, 20 years perhaps old. So it's a young industry that is still searching different business models. Same with the conventional microfinance industry, of course. It is currently still donor-led, very heavily dependent on subsidies. But I think there are a number of different business models now emerging. And yesterday we were in a cooperative bank, so there is a very strong cooperative model coming particularly out of Indonesia, which is a very populous Muslim country, and really promotes a cooperative business model, which is very interesting, particularly from a grassroots development perspective. There are still a number of big players that are working through the social finance route, which has also, of course, a strong tradition within Muslim countries, and also, of course, work with the donor community, development donor community. There are now a number of smaller players that are also, if you like, developing a for-profit model. And that is, I think, appealing particularly, of course, for investors, because we do recognize that in order to make Islamic microfinance reach scale, we do need private sector involvement in a way that the conventional microfinance sector also thrived. And there are business models now that also will use particular equity investment opportunities in order to build the kind of capital base that you require to reach scale. So everything is on the table at the moment, and I think we do learn from the conventional sector to some extent. We are guided by that very strong value proposition of Islamic economics. But in terms of business models, there are a range of different models available.
Yes, Fadwa, I think that the business model is one of your concerns.
Yeah, absolutely. And we have to learn from the good thing of the conventional, but the bad thing also. The crisis of over-indebtedness we have faced 2010, 2008, and prior to that, it's a good lesson learned on what really drive and what provoked that, what were the reason behind the over-indebtedness crisis, and how maybe having a product that is asset-based could prevent the micro-entrepreneurs who find themselves very over-indebted. I'm just coming back from Beirut, and over there is no clear regulation, there is no credit bureau, so people they don't have access to historical data of any micro-entrepreneur. So there is still the risk remain. When you have an asset, the risk could be mitigated. But as you say, if we talk about the learning, let's take the example of Wasil Foundation. Wasil Foundation was a conventional microfinance institution. And slowly they decide to transform by having a window. The window didn't work, and then the branch, and then they become the full Islamic microfinance institution. So there are lessons learned why sometimes you are not scaling up. Best practice in microfinance conventional should be applied to the Islamic, a more mature, more professional industry. But as you say, it's 10, 15 years. Who would have invested at the beginning of the Grameen Bank? No one. What is this guy having 4 women doing those type of project? No collateral. So this is where we are today at the Islamic sector. Maybe a little bit advanced because we have learned from the conventional, but it's a young, dynamic industry that needs some lender support, funding, that heavily is depending on grants, but it has a potential. And I think when I look at the conventional microfinance sector today, they can really make a difference. The way we do product today could be addressed for all religion, everyone, religious or not religious, but you just need to think outside the box. Okay, today we have been doing this conventional for such a long time. Maybe it's time to see things in a different way because people want something different. And the risk is growing and it's different. So I think it's important to have the reflection behind the concept of Islamic microfinance.
Thank you, Fadwa. Thank you, Ahmed, for your contribution. Thank you very much. I'm sure we all appreciated your insights. I think it's time now to go to the question from the audience. Maybe one question for one people. Yes, one person. Yes, Miss. Okay.
Thank you very much. My name is Henk van Oosterhout. I work for the microinsurance network. In my previous life, I was involved with microfinance. I have a question, and that is that you're talking about Murataha as an example of equity participation and shared risk. I'm not always fully understand that. I think there's also another type of Islamic banking, and I'm not sure whether I pronounce it well, which is called musharaka. Yeah. Yes. And I see there much more this equity participation and risk sharing than in Murataha. But maybe you can explain where my thoughts is wrong.
I think it's a question for Mohammed.
Yeah, it's just really, I mean, we took the liberty today in the half an hour that we had sort of allotted for the presentation and discussion, really, to give you just a very small insight into the sector. But you're correct. When I mentioned in my answer, when I kind of just provided an overview, there are really 3 types, if you like, of financing contracts. One is the trade contract, and Salam that we saw in the movie. the Murabaha transaction that I described is a trade contract, yes? So there's no equity involved, there's no profit and loss sharing involved, okay? It's just a straightforward sale, okay? Structured in either as an agricultural sale or an asset sale, etc. Then, of course, there is the leasing element, ijara, okay? And then there is, as you said, the partnership agreements, which is musharaka, which is a full-fledged business partnership, really, and mudaraba, which is a silent partnership, yeah. So these are the really interesting contracts from an Islamic perspective, because they are really fully profit and loss sharing. So it's really a participatory financing arrangement. It's also interesting from a microfinance perspective because when you are a partner with a micro-entrepreneur, of course, you also provide automatically the business development support side of things, because the MFI has an intrinsic interest in making sure that the entrepreneur is thriving, because there's no guaranteed interest and return in it. Only the profit that the entrepreneur is making is actually the profit for the MFI, helping the MFI towards sustainability. So the business development side of things is really absolutely critical in the profit and loss sharing instruments, which we didn't describe in great detail today. But we can do that on another occasion outside, maybe over lunch, etc.
Another question, yes?
Hello, I was just wondering, in the context of Salam, how do you manage, considering that you fix today the price that will be paid at a later stage, how do you handle great price fluctuations, and how does the MFI, especially in the context, for example, Fasil Foundation, if they all have these clients going for the same type of product, agricultural product at the end, how do they manage their potential overexposure to the price fluctuations that they will face on the market?
Absolutely, it's a good question. 2010 in Pakistan was the flood season, so I fully agree with you. So that's why they have developed the insurance for agriculture, takaful. So and the way Wasil Foundation work, they don't only work with one type of crop, but different type of crop to diversify the risk. But of course, if there is a loss, it will be a loss for both of them. But they take upfront insurance, which is the takaful, from this, as you can have in the convention. It can take some $5 or something, and then build an insurance company. This is exactly the same principle. But you're right. As much as you have on the conventional microfinance in agriculture, if your agriculture product is only on crops or of animals or cattle breeding and so on, the risk is the same. So the way you mitigate in the conventional is more or less the same. It's just different type of product.
Yes, someone else? Yes, maybe, yeah. Oh.
Elena de Rosmodic from Luxembourg for Finance. My question, I've actually got several questions, but I'll just keep to two. It's accepted these days that smaller enterprises are part of microfinance. I mean, a farmer who has 10 employees, a tractor and a grading shed is a commercial farmer. How is it that these products can be so simply put together for the microfinance industry, and yet we don't seem to manage to be able to scale them up for the ordinary business community? I mean, in Europe, it hasn't really taken off at all. The sukuk are all too complex, too expensive, take too long to put together. There's too many contracts. It all becomes suddenly very complicated. So that was my first question. And my second was, what on earth did people do before we invented these things? I mean, what was happening 50 years ago, 100 years ago when businessmen wanted loans?
Thank you. Mohamed, first.
Yeah, obviously, picking the second question first, because that seems to be slightly more, on my expertise. The Islamic microfinance industry, of course, is utilizing really traditional financing instruments that have been in the community for hundreds of years. In fact, the salam that we now see is actually a product that's been around even from the time of the founding of Islam. Yeah. Okay, so it's a traditional support mechanism that's particularly to farming communities, and they have practiced it, if you like, on a community level. Sort of a village banking level for hundreds, if not thousands of years. what Islamic microfinance as an industry is now trying to do is trying to take those individual cultural practices. If you look at the Muslim world, of course, it's a vast, diverse, geographical region, with different understandings about, all sorts of issues. What the Islamic microfinance industry is trying to do, and also, of course, the Islamic banking industry is trying to do, is trying to standardize the way that we understand those products. So when Fadar is doing Salam in Pakistan, and David is doing Salam in Mali, that these are the same types of products, following the same types of frameworks and processes. So that's the main challenge, and we are moving towards that. And that's why we now talk, if you like, about an industry rather than just sort of a set of practices. In terms of the first question, obviously this is more of a generic question, if I understood you right. That's not just necessarily to do just with Islamic financing contracts. Of course, what Islamic finance provides here is maybe an added layer of complexity, because when, in terms of corporate governance, now when we talk about how Islamic financial institutions have to govern themselves, of course they have to follow, if you like, a conventional corporate governance structure. In addition to that, of course, they also have to have what we call a Sharia governance arrangement in place to make sure that the products and services it's providing are also compliant with that ethical value proposition. So that adds another layer of complexity. But in terms of how the overall Islamic finance industry is developing, I think we're actually seeing almost a top-down approach. So we now see a lot of Islamic finance happening in investment banking. In Luxembourg, we just learned is I think in the top 3 of the world in terms of Islamic investment banking, and that's why it's very interesting, of course, for the Islamic microfinance industry to be also here today. And of course, it's now trickling down to private banking and also SME financing. But of course, the blueprint of contracts is the same. So it will be, if you like, a top-down led development in the Islamic finance industry that we will see that will take some time to trickle down onto the micro sector.
Maybe just to add on the second question that you have raised, and is one of the challenge really of the microfinance, Islamic microfinance industry, as you clearly say. To have an industry, you need to standardize. What makes the conventional working? We start to have this group lending, we move slowly, we see the shift in the microfinance from the group lending to individual, things are standardized. Of course, there are different products and specificity, but at the end of the day, the methodology is quite the same. So this is the same for the Islamic microfinance. You need to develop some product, raise them up, scale them up, and develop standardize. Because with the standard, you start to have a regulation, it should be the other way around, you should have a regulation and a developed product, but the reality is, even on the conventional microfinance sector developed, then we start to be regulated. It's the same with the Islamic. So we try to be as professional as we can, develop as good product, try to standardize, and then you have an industry, and then you can report standard on best practice, what is a best practice product on Salam, for instance, how is the governance and this and that. This is the way the conventional works also. So it's the same for the microfinance, Islamic microfinance industry. And as you say, this does exist for a very long time. It's just a matter of putting them into standards and develop best practice.
Thank you. Maybe a last question.
Saad Manjour from ADA. As I understood, one of the main points of the Islamic finance is also to avoid the use of interest rates. So my question would be about the debt financing of these microfinance institutions. So could they still take that with interest rates, even if it's not Sharia compliant? Or are there any new mechanisms to avoid this interest rate?
You mean on the liability side?
Exactly.
How you finance this institution. This is a discussion we have just even before the debate. It's really a trigger because normally, the ideal world, you have an Islamic bank that could finance Islamic microfinance institution, and then all of them are Sharia compliant based on best practice, and the mechanisms are totally matching. But I have seen, and I have done it in the past also, as a commercial and investor in the microfinance sector, that we have to invest in Islamic microfinance institution. So how do we do it? The importance, and I have asked some expert on this matter, it's really to have a contract. The important is to have an Islamic contract between the microfinance institution and the lender. So in this case, it was Mudaraba, if I remember well. So that's how we have structure. And then by definition, or type of investment are not, we're not investing in something that is haram, which is you cannot invest in pork, or alcohol, or child abuse, or industry. So this is in line with the microfinance conventional best practice also.
But in the contract between the lender and the institution, there is any mention of an interest rate somehow, or
no, it's a mudaraba setup. So there is no interest rate. No, absolutely no. It's a Sharia compliance contract.
Mudaraba being a partnership equity arrangement. So
sorry, yeah.
Thank you.
Thank you so much. We can move maybe to the conclusion, and you will have the possibility to ask some questions during the lunch break.
Panel. Works. I think it was pretty clear in the various elements of Islamic microfinance. I mean, for me, it seems fairly obvious. One starts, like any financial business, with giving the customer a choice. Really, now, if he wants conventional, he can get conventional. If he wants Islamic, we should work on ways that offers him Islamic products. That was the case with conventional developed finance. I spent a few years in the Middle East, and it was exactly that. The emergence of Islamic banking sector was a response to what the population wanted. Now, a lot of the innovation, because even though Islamic finance as concept and as methodology exists for hundreds of years, as you just said, it may not necessarily always have been very adapted to today's needs. So a lot of the innovation came actually from the conventional banking sector and was then adapted in a certain way so that the products can be offered in compliance with Sharia law. And fortunately, innovation wasn't pushed too far in the Islamic banking sector, so we didn't see the crisis hit as much as the conventional sector was hit with. Otherwise, there's a lot of similarities, I think, between the conventional microfinance sector learning from the conventional finance sector and the Islamic finance sector learning from the Islamic banking sector. I think it's a question of reaching the customer. It's a question of poverty alleviation and to have the right product and services in place so that, as I said earlier, that customer does have a choice. Otherwise, I think these institutions face very similar challenges. It's a question of good governance. It's a question of risk management. It's a question of adapted products. They can use insurance. They can use leasing products in certain ways to help them adapt the product range and address the risks. I think you said earlier form is more important than substance. Made me smile a little bit, I have to say. But in the end, one has to be careful, I guess, that one doesn't push it too far in terms of product innovation. There is obviously the element of having Sharia boards, scholars who have a look, and I think it's quite important what you mentioned as well, is that the Muslim world is very, very diverse and widespread, and the criteria used or the interpretations used may be different in Asia as they might be in Arabic countries. So, for example, I was quite interested to see that the murabaha, which I remember from my days in the Middle East, was a bit frowned upon by some scholars in this particular example, I think is the perfect instrument for what is actually needed. As long as you don't use metal-based trading to disguise, so to speak, other a traditional finance transaction, in fact. Otherwise, I think the other important, it is partnership. I think that is important to remember. It is a common goal. It is the aim is to potentially make a profit, but make a reasonable profit, and which is not lopsided. So both share in it. On the funding side, which I picked up at the very end, I think that there are examples. I mean, Islamic banks, which I mentioned at the very beginning, do get a lot of funding from the conventional finance sector. It's a question of in which form and having the right product in place. It's a bit like the MFIs financing their clients. So here you have funders who finance the MFIs. It is a question of having the right structure, and I think there we've come a long way. That lawyers are now specialized in this type of financial, I wouldn't call it engineering, but financial developments. I think we have rating agencies now who are very familiar with Islamic finance. And I think we have investors who are very happy to look at it, and I think that is something that maybe the traditional microfinance MIVs should also look at it and have it more explained to them that in fact there are a lot of similarities, and their risk is not necessarily bigger than if they were just to finance conventionally. So I think to conclude, really, I mean, Islamic microfinance is at sort of the confluence of microfinance and Islamic finance, and it should have the potential to unlock a lot more access to poverty in Muslim countries, be it for Muslims or be it for non-Muslims. So I think that was it from my side. I think that Mr. Demilier, you still have a few words to say as well.
Thank you very much. Thank you again, once again. Thank you, Mohamed and Fadwa, for your strong contribution to this event. Gilles Franck, for your conclusion. La Banque de Luxembourg, to welcome us in this auditorium. Directorate for Development Cooperation and Humanitarian Affairs. Inclusive Finance Network of Luxembourg, BRS, who organized the microfinance lunch break yesterday in Brussels. It was great also. All those who came to listen to the conference, as well as those who watched us during this debate. We are looking forward to seeing you next year in 2017 for the next Midi. Enjoy your lunch that will be served. Thank you. Thank you again.
Well done.